Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Sebastian, Chief Operating Officer of Option Pit, to discuss trends in the Nasdaq 100 index. Of course, we're going to touch on Nasdaq Volatility Index, or what we call VOLQ as well. Mark, it's great to see you as always. Welcome back to Trade Talks. And I guess the 11 years that you and I have been working together, I can't recall a time within that time frame or before in our career past where the volatility and the velocity of the moves for as prolonged of a time that we're seeing right now. It's been a number of months where we're getting 1, 2, 3, 4% moves in the major averages and of course commodities within a session. I mean, you're round tripping and then some.
Yeah, the market is definitely on edge. The S&P 500 has managed to hold up, but we can see in the Nasdaq 100 the weakness. The news out of China that Foxconn is having to shut down its factory has been really a problem for Apple, which is why you're seeing the Nasdaq show so much weakness, and VOLQ, the volatility index for the QQQ, really get frothy here. We're back above 35% in VOLQ. The one thing that was really holding the Nasdaq together has been these mega caps. If we start to see weakness in Amazon, Apple, Google, Microsoft, that could cause real havoc for markets and really set us up for what could be a leg down. A lot of people are looking for sub 4,000. I think that's in the cards. This is the week for something bad to happen. We are looking at quadruple witching for options and futures, which means S&P and Nasdaq futures expire, S&P and Nasdaq options expire, futures options expire, and equity options all expire on the same day. So the FOMC meeting, there is a lot to unpack this week. And if there was ever a week where we could see some serious fireworks and really the market make a second leg down, it is this week.
Right. And Mark, as a trader, how are you positioning through these? I would imagine on the overnight, it's incredibly hard to do, but even intraday sessions, I mean, look at what we're doing today, Monday, March 14th. I mean, in the past half hour, there's been some damage done there when markets were up to open the session.
Yeah, this has been a very difficult market for investors. If you're a trader, there's a ton of opportunity because you can play the intraday swings. But on a day-to-day basis, we are in essentially a real bear market. And the market, the trend is down. If you look at the moves we've had, it's been generally slow moves lower with really wild, booming bear market rallies, kind of turning on its head what we saw for most of 2021. So these huge rallies that we see, they look like real opportunities for us to go long, but traders have been using those as an opportunity to get out of long positions, and the market seems unable to break out of this cycle of moving lower. I don't know what the catalyst is going to be, but before we can really, I think, build a base and start to grow higher again, we need to have that true ugly day down 3, 4, 5%, and we've just not had it. VOLQ has been channeling higher. It has been swelling higher. I'm looking for VOLQ to make a run at 40 or 50. I'm looking for the Nasdaq VIX or the regular VIX both to break over 40 because this market looks like it wants to crack.
Yeah, and Mark, it just almost feels different than the COVID volatility that we saw in March and April 2020. Obviously, geopolitics is lending to that. But secondly, I don't feel as if inflation and interest rates and what's going on under the surface of the economy necessarily existed then. And it just feels like the moves now are more exasperated than those, 4, 6, 8 weeks that we saw in the beginning with COVID.
Yeah, what this looks like to me is a lot more like what we saw in, a little bit of 1982 and a lot of 2000, 2001, 2002, where again, we didn't see just we did see big drops. We had September 11th during that period of time. But what really happened was over the course of 6 months to a year, the Nasdaq 100 gave away a lot of value because there was a lot of names that were overpriced. High beta names continue to trade at huge multiples. Even the mega caps are still carrying a pretty hefty multiple. So there is room to the downside for both the triple Qs, the Nasdaq 100, the S&P 500, and I think the way is open for VOLQ to break 40 or 45, potentially hit, and certainly a high for the year, and maybe a high for the leading out of the COVID collapse.
All right, Mark, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.